Hey, Bulls and Bears, what is happening? You're watching Bull, Boom, Bear Bust. That is Friday, November 11th, 2022. I hope everyone had an excellent week. I'm back with another update on the economic collapse. Is the collapse happening in the stock market? No. A decline is happening. You're going to see lower lows in the coming weeks and months, in my opinion. But the real collapse is happening with the middle class American, the middle class individual, not just in the U.S. Most of the globe is engulfed in this debt scheme, is what I call it. But let's talk about what's happening with car loans. A recent article here, Jalopnik, just came out yesterday. Over 500,000 Americans are 60 days late on their car payments. Auto loan delinquencies hit a decade high record as pandemic loan protections on already sky high car payments end. So that's another thing. We've talked about that, but I don't think I've given any updates recently. There were protections put in for many different types of loans and debt as far as people making payments. And if they skipped payments, they didn't get their cars repossessed initially. Well, those have ended now for the most part. Similar to many other programs like the rent, the moratoriums on the foreclosures, the rent prevention, eviction prevention programs, all those things that we've talked about. But let's talk about what's happening in the car loan market here. First of all, the used cars and the new car prices skyrocketed. We all know that over the last couple of years. New car prices hit an average of 48,000 in July. That was the peak. Now we've seen prices come down very slowly since then. The average used car price 31,000 at the peak. We've seen both new and used car prices come down a little bit. As we talked about a couple reports ago, though, the car dealers are not cutting prices as fast as wholesale prices are dropping, right? So wholesale prices and what dealers pay at auctions are declining much faster than the cars sitting on the car lots that are for sale. Of course, the dealers are going to try to get as much out of the cars as they can, especially considering they paid more for the car, earlier this year in most cases at these dealers. And here's an update on the expiration of these protections for car loans. I'll take it right out of this article here. Data from TransUnion shows that about 200,000 people took advantage of pandemic auto loan accommodations during the early days of the pandemic. These programs were put into place to protect people whose income had been affected after losing their job or any other ill effects of the pandemic. These programs have since ended, bringing those owners to a harsh reality. Those same 200,000 people who took advantage of the program, many of them are now 60 days or more delinquent on their auto loans, according to TransUnion. Another 100,000 loans are also 60 days delinquent, but are similarly designed accommodation programs that continue to keep their cars from being repossessed. So there you go. Another 100,000 are still in some sort of a program that's going to prevent them from getting their cars repossessed. But overall, 500,000 people, 60 days plus on their automobile loans. We all knew this was happening. We knew this was coming. And now here we are. How much worse is it going to get? Is it going to be 1 million in a couple months? Is it going to be 2 million by early 2023? Please let me know what you think down in comments. And how quickly will car prices come down as the snowball continues to grow bigger? And it's not just going to be the delinquencies. It's going to be a lot of things combined to bring on this tsunami, this debt tsunami. So when people lose their cars, they can't get to work, and that's going to be more job losses and loss of income. There's going to be other job losses with all the increases in layoffs that we've been seeing in the tech sector. And as this snowball gets bigger, it's just going to compound, and you're really going to see a whole different world here. Look at now compared to just a couple of years ago. The world is completely different. It's completely changed. And these debt levels are unsustainable, and it's going to be mostly felt in the lower and the middle class. All right, another report here out of Automotive News. Big banks warn of trouble with auto loans as used vehicle pricing erodes. The used vehicle prices slumped 7% in the third quarter. All right, so let me move over here, and I'm going to bring up a chart here of the Manheim Used Vehicle Index. And if you look at the run-up in prices just over the past couple years, it looks a lot like a stock that took off in a bull run, and then the inevitable correction on the way back down. And anytime, I've said this a lot, anytime you see a price of something go nearly parabolic, I mean, look at that line. It looks nearly straight up and down, nearly vertical. Anytime you see a price rise like that, not a good time to buy. And that's true with stocks and, in this case, vehicles. The fear was that the price was going to go up and never come back down. People were worried about hyperinflation. They didn't know when the pandemic shortages were going to end. They didn't know that the chip shortages were ever going to end. That is the fear, and that is the FOMO, the fear of missing out. There's always that thought in the back of the mind that things are never going to change, and that this is the beginning of hyperinflation. And we've seen it in other countries. So there is that reasonable fear, I guess you could say. But a lot of the people that had that fear, are regretting their purchase now. Vehicles depreciate enough by themselves. Usually, the last couple of years have been the exception, but usually a vehicle is a depreciating asset. And now add on top of that this hyper depreciation because prices are falling on top of the vehicle getting older and more miles on it, which is, plays a part in the usual depreciation. So now we have this double depreciating asset here. So it's going to be pretty amazing to watch this unfold. Now, if you bought a car over the past couple of years and you're still doing financially well, then this may not be a big deal to you. But a lot of people just don't like the feeling of buying something and then watching the value plummet. Now, another article here relating to this out of Bloomberg. Wall Street warns of trouble brewing. Auto loans prices dip. Red flags show up in Wells Fargo, Ally, and Fifth Third Bank results. The Ally CEO says, quote, "We still feel really good about new loans," unquote. All right, folks. So what do we think? When is going to be the ideal time to buy a vehicle? Please let me know down in comments. I'm thinking mid to late 2023. I think because of the enormity of this debt and how over leveraged most people are, and the other factors that are going to be compiled with the job losses, the continual high cost of living. Yes, inflation came down a bit, but it's still way elevated compared to 2000, pre-pandemic. And the thing about inflation and the cost of living is people see a lower rate of inflation and they think that somehow is going to be helpful or it's going to rescue somebody that's in tons of debt. It's not. So a slower rate of inflation is not deflation, right? We need to see bigger deflation across the board, falling cost of living, not just a slowdown of the increase. You see what I'm saying? We don't need a slower rate of increase or rate of inflation. We need deflation across the board, lower cost of living across the board. Of course, nobody's talking about that. They're just looking at the slowdown in the rate of inflation, which is ridiculous, but that's what most people are tuned in with, except everybody here. I think we kind of know the schemes, the games that are played, or the word tricks, that are used. But I think mid to late 2023 is going to be the ideal time. Of course, if you need a car and you can't get to work, if you're going to buy a car now, I mean, you have to have it, you have to have it. But if you don't have to have it, you may want to hold on and just see and kind of a wait and see approach. Grab your popcorn, sit back and watch the carnage. All right. I hope everybody's doing well. Thanks for being here. Hope everybody has a great weekend coming up here. I will be back this weekend with another update for you. Please make sure you like, subscribe if you like what we talk about here. Thank you, everybody, for supporting this channel. Big love. I try to make a heart, right? Some people do that. Does that look like a heart? I don't think it does. I don't have my hands in the right shape. Not a thing I do. I usually say peace. Bye for now. Big love.